All right, good morning. So we're gonna go over what happened September 11th through the 15th. As you can see, it was some big news earlier today. Let me pull it up. It is on. I look at Forex Factory. All right, let's go over here and pull this up and let me stop share. Let me go to this share right here and let's see. Let's pull it up right here. All right. So as you can see, we had let's move this up. Since we're doing EU, we're just gonna take these off. And again, this is forexfactory.com. I'll make it pretty easy and smooth. All right, let's go to these two right here. Since we're doing EU, let me make sure. Yeah, we're doing EU. So as you can see, the 13th, we had a lot of 13th through the 14th, 15th. We had a lot of red for the CPI, which was very bullish for the dollar. A lot of positive feedback this week. So, but here's the thing: when you trade on a daily time frame, and let me pull this one up again. Let's do this. So when you trade on the daily time frame, you have a wide enough stop sometimes that you could actually withstand the news. So let's go from there. All right, here we go. So what I do normally at the beginning of the month, I do the opening price. So as you can see my line right here. So this is my opening price, right? So this is August 31st. It wasn't. It's actually doing out the week that the new price comes up. So as you can see right here, we'll mark it off. This is the price right here, which is let's just mark this off right here from, and it's at around 1.08 434 opening September price. That's so you can see it throughout here. All right, let's make that smaller. So, and as you can see, my weekly price right here too, uh, because if you look, this is from last week. So typically, what I do right here. So now this, I wait for the newer price. All right, so that'll be the next week, because it just with me, I align it to the same way. All right. So, and as you can see, I have my 20 EMA right here. Pretty simple. You can just go in here and go to type in EMA, pull up, and I do on the daily. I do the 20 EMA. So as you can see right here, this is bearish right now. It just had a pullback. So it's going down. So I'm only looking for sales right now. And I keep it simple, man. I keep it simple. All right. Right here, since I've seen this retouch off the 20 EMA and push back down, um, I would take a sale right here. But I would put it to the next nearest candle, which is above here. Typically, I do a set risk to reward, which is 140 to 140 uh, pips. And if I see it continue to go down, I will keep going. All right. So um, let's see how this plays out. And again, it's still September, so it's not totally done yet for the month. As you can see, this is the next week, and then you can base it off of, since we going basically bearish. And I'm sorry, guys, I'm all over the place tomorrow. I'm still tired. As you can see, we still bearish. We're still going to look for trades, so you can actually take another one, set another one right here, another trade, um, hit a position trade, not a market, but you can actually set a buy trade. I mean, a sell trade this way. Once you see it break, as you can see, it's still going boom. All right. Pretty plain and simple, man. I keep it real simple. You don't need all these indicators. I have a couple of ones I'm testing up here, but that's my 52. I'm not testing those. Those are my 52 week lows, stuff like that for my stocks. I have my uh, daily, weekly, monthly, yearly open. That's this one right here. And let's go up here. I only have the. I normally don't do the daily. That's on the below the. If I go to the 4 hour, whatever. If I want to scalp or take a position trade during the day. Um, I mean a daily trade, not a position trade. So if you go to indicators, you can just type in DY. Go. And then you look at daily, weekly, monthly, yearly open, and it's right here by SBTNC. All right, as you can see right here, you're already done for the month. So the biggest thing is EU moves pretty smoothly, and you can see right here. You can bring these up. You can right click on there. You can put economic events on the chart. Put only future trades. You don't have to go back and hit event break. That's doing too much. Um, but you're done by September. Let's see, 14th, and it depends on your account number and your account size and all that good stuff. That depends on what how much money you make or your percentage you make on your account. But that's pretty much what I look at right here. That was my biggest thing. So let's go over here. I looked one. Uh, what is the pair trend you're trading? All right, all right. And just think these are questions you want to ask. And for this one, um, it's it's EU. All right, and currently it was bearish. All right, let's go to the third one. The third one. The reason why I took the trade is uh, bounced off the 20 EMA on the daily. All right, so all we worrying about is the daily time frame. So these trades take a few days, and I believe you find quality trades when you go off the daily time frame because especially if you're new, you want to make sure you're taking your time with these trades and not just bouncing all over the place. If you just brand new to the trading scene, you don't want to go down to the 5 minutes because it'll be all over the place. All right, and then I use push candles, meaning strong selling pressure. That's for me. And also use uh, opening price. All right, that's what we're gonna do. So let's pull that up again. All right, right here. You see that? What pair are you trading? All right. Normally, if you're brand new to it, you stick. It stick with whatever works for you. Everybody says stick with. 1 second. 1 second. 1 second. Let me turn this on. All right, here we go. So as you can see right here, the beginning of the month, right here, the price opened up. Oh my goodness gracious! Let me see. Here we go. The price opened up right here. All right, and this is the second week. Right, it opened up right here, came down, boom. All right, and that's because I do 1-to-1, so I only need one trade a month. All right, so you got to think if you trading, 100K account, 2% risk, that's $2,000. Even if you trade $100 account, you trade 1%, of that $100 account, that's fine as long as you just starting and you're profitable. If you trading, it's up to you. If you trading $1,000 account, you want to use 1 to 5 risk. It's your risk tolerance. It's your life. I'm not gonna tell you um, what you need to trade. Some people risk tolerance is higher than other ones, but I can promise you. On a daily time frame that I believe that's just me. It's just me. I'm not a financial advisor or any kind of trading guru, but I just know that going off the opening prices of the month, and then you can look at the weekly, and then we have one more week right here. It should be down here somewhere. Let me see. This ended. So right here, pretty much would be kind of right here is the open. This is where it closed at. So you're looking at potentially this would be the next um, opening price, which is to be at 106,428. And then the reason why I have this because this is a previous support from March. So as you can see, it typically right here it is not typically. It is another support right here that is touching right here. So right now, I'm only looking for bearish prices. All right. So I'm not going to take any on the daily time frame, any buys. That's just me. I'll look at another pair until it comes up again and bounces off the 20 EMA. All right. But right now, what I'm looking at is potentially next week coming up. I'm looking for another bounce or a rejection or retracement before I take, boom, take it down to this support. All right. But I have to look for rejections off of here. Like right here, you see this rejection candle. Where's my tip? This rejection off of here. You can see this rejection off of here. That's what I'm looking for. If you can look back all at this on the daily time frame, you can see rejections right here. You can see rejections right here. All right. It's been the whole year been in the uptrend anyway since 2022. You can see um, it broke through, but this is a rejection right here. All right. It broke through again. Rejection right here. All right. But pretty much on the daily time frame, it's pretty easy to identify, especially if you're brand new. I would say stick to the daily time frame. All right, and right here, this is what I see for this week. Again, this is not. Don't look at this chart or this video and say, "Oh, he's going to take the trade right here." No, actually, I'm waiting because this is a nice push. And this chart, this my trade already closed out for the week, for this month. But I'm looking for another position. But I'm looking for it to bounce. As you can see right here, it bounced, and I'm looking for actual, you know, uh, a nice little rejection off of here, and then to take another one, another trade. So pretty much, I hope that explained to you. Let's go over the recap. Trading the daily using the monthly, weekly opening price support and resistance with the that's right here with the 20 EMA. All right, and what pair you trading? This one we trading EU. You just whatever pair you want to look at. Let me know in the comments if you want me to look at something for the week. This one is bearish. Bounced off the 20 EMA off the daily. I use the push, strong selling pressure right here. You see, if you look right here, push, selling pressure right at the beginning of the month when it broke through. All right. And I looked at 20 EMA, which is bearish, and then opening price. All right. You can use the weekly, but I'm saying the monthly is very strong whenever it pushes back. That kind of tells you where it's going for the month. And like I said, I use 140, 1-to-1 risk reward ratio. And then throughout the month, I'll compound those trades through weekly time frame, the weekly opening price right here. And you probably have another weekly. And as you can see, it's going in line right here. Look, from March or from June right here. Then you have March right here. If you can see, it's opening up again right here. See, you see it rejected off this price and went up. All right. And as you can see, look right here, opening up, rejected in July, came back, opened up that same price. So on a daily, it gives you that good. You only have to look at the market once a day because at one candle opens up every what is it, 5 o'clock? New candle opens on New York time frame. You can see, boom, it stopped right here. It's going to open up right here. And potentially we might miss this trade because it might push down, but that's okay. All right, that's okay because that trade wasn't meant for us to begin with. But I'm gonna tell you specifically what I think. This is just me. There's some news for the Sentinel. Then there's the Fed interest rate decision, FOMC economic projections, Fed price conference. So, and this is on Wednesday. So I specifically don't see anything pretty much happening until Wednesday, but I feel again it might do something like this. Boom, boom, another little candle, push up a little bit, back up to the previous week, take out these, and then push back down this week by the end of the month. So other than that, I hope that made a lot of sense to you. I know I was early this morning. It took me a while to get going. But other than that, I will see you guys next week.